So you want to know what liquidity is. It's very simple. In this video, I'm going to be going over the 3 key factors of what liquidity is and what it looks like. Let's get into the video. Liquidity can be referred to 3 things, that being draw on liquidity, DOL, liquidity itself, or stop losses. There are also different types of liquidity that I'll show you on a chart in just a second, and there are different types of key liquidity levels. Liquidity is literally just money. For example, let's say you're in a trade and you have a stop loss. The moment the market triggers that stop loss and stops you out, that becomes liquidity for the market to shoot back up, or in other words, to trigger a reversal back to the upside. So pretty much what it is other traders' stop losses waiting to get hit. The best analogy that helps me is a car needs gas to keep going, and the market needs liquidity to keep creating new highs and new lows for new trading opportunities. All right, welcome to air traffic control. I'm going to show you exactly what liquidity looks like. So as you can see over here, we're going to have this uptrend in the market. We're going to ignore what's in the back just to make it a little simpler, but we uptrend up here. We create this high. After creating this high, we're going to create this swing low, which I have marked out right here, sell side or swing low. It's the personal abbreviations I use to mark out my sell side liquidity. So after creating this swing low, the market continues to trend higher before having a little pullback, creating another swing low or sell side liquidity. So now using the second pullback as an example, I got in right here with this red line being my stop loss. As you can tell, due time at 9:30 market open, this big red candle, we came down. We didn't hit stop loss yet, but the second candle went and stopped me out. That was a perfect example of a liquidity sweep, meaning this swing low right here got swept out by the 9:35 candle. So after sweeping this swing low right here, creating an SMT, we had this huge bullish engulfing candle eating the last 3 candles, which confirms a sharp V-shaped reversal after sweeping liquidity right here. Then we had a retest, filling any inefficiency here as well after proceeding to go up. Now my draw on this was all-time highs, which caused me to have that bullish bias. And once we swept this low right here and got in that huge V-shaped reversal, we ended up trailing towards these buy-side liquidities. Not 1, but 2 buy-side liquidities. This one was actually a stronger format because it was relative equal highs. That can be for another video if you want me to go over it. So pretty much to end out the video in simple terms, all we simply did was have an uptrend. During that uptrend, we created a swing low. After we started uptrending at 9:30 open, we plummeted down. After we plummeted down, we swept this swing low, which was people's stop losses resting right here. After we swept their stop losses, we had a huge bullish engulfing candle, confirming my draw on liquidity to all-time highs. After sweeping sell-side liquidity and after having a huge V-shaped reversal, we then went to retest it or fill inefficiencies. After we filled those inefficiencies, we went to target the rest of the remaining liquidity or stop losses you could call it from the previous day, and then we just ended up skyrocketing up. So that's pretty much what liquidity is. It's just stop losses or other people's money that's used to start a reversal or used to have a strong market move. If you want another video covering inefficiencies or just pretty much anything else in the market, please do not hesitate to leave it in the comments. And in the meantime, happy trading, guys. Take care.